Welcome back. GE Shipping is one stock on our radar. Quarter for GE Shipping with a double-digit decline that we saw in revenues. Shivakumar, the Executive Director of GE Shipping, is with us. Shivakumar, thank you so much for joining us on the show. Appreciate your time here. Can you tell us first if, the bigger topic really is the impact of the Red Sea issue, right? Has that had any impact on your business? Freight rates have gone up quite a bit. So what has the implications been up until now? And what do you see as the way forward?
Yeah, so the impact, morning and thanks for having me. So the impact of the Red Sea business has been different on different sectors. So the biggest impact we've seen is on the product tankers. There was a big trade which is of refined products from the Middle East, from the west coast of India towards Europe. A large part of that is now getting rerouted around the Cape of Good Hope. So they're taking the long route, which doubles the travel time and therefore requires more ships, and therefore the market has got tighter. So that's on the product tanker sector. Crude tankers have had a small impact where a smaller part of the trade actually goes through the Suez Canal, and so also the dry bulk markets. Product tankers broadly are much stronger than they were at the same time last year and than they were about a month and a half ago before they started.
Okay, all right. Hi, Mr. Shivakumar. Good morning and thanks so much for joining. You want to give us an update in terms of rates? Dry bulk, I believe, is still a little bit softish. I mean, you could give us an update on crude tankers, dry bulk, as well as product tanker rates?
Yeah, so dry bulk, morning, Nigel. So dry bulk rates have been stronger than they normally are in the first quarter of the year. The first quarter, typically because of the Chinese New Year, it tends to be the weakest quarter of the year. They've been stronger, much stronger than they were in the same quarter last year, especially for the larger ships. The product tanker rates, as I mentioned, are significantly higher than they were last quarter. That's the October-December quarter, and than they were in the corresponding quarter of the previous year. Coming to crude tankers, they are a little higher than they were in the previous quarter, immediately preceding, but a little lower than, maybe 20% lower than they were same time last year. So broadly, product tankers and bulk carriers doing better than last year. Crude tankers a little worse,
okay.
Or rather little not so. Yeah.
Got that. Mr. Shivakumar, morning. So overall, what is the vessel utilization right now, and how is that likely to shape up in the H2 that we are in and going forward?
Yeah, so if you're talking about vessel utilization for us, utilization is pretty much 100%. Market-wise, the tightness in the market, as I said, the rates are an indication of what is happening with global vessel utilizations. Product tankers are the tightest market currently. Again, we don't know how this will pan out going forward. The situation in the Red Sea is evolving every day. Every day there's something new happening there. So we don't know how this will happen going forward, how this will pan out going forward. As it stands, this is what we are seeing. Product tankers are very strong. And crude tankers are pretty strong, but not much impact from the Red Sea situation currently.
Can that last? Can the discrepancy last between product and crude?
Yes, it can, because not as much of the crude trade goes through the Suez. So if you have a very large crude carrier carrying oil from, say, the Middle East to Europe, which is the route which is most affected, right? Those typically don't go through the Suez Canal, so it's not much change. They would have gone round the Cape of Good Hope in any case. So not much of an impact there. Smaller impact, let's say. Yeah.
Okay. All right. Mr. Shivakumar, on the offshore rigs segment, I understand for the past quarter, one of your rigs, I think, was non-functional. And that's why on a sequential basis, there was some pressure, though on a year-on-year, it's still looking good. Could you tell us for quarter four, how much better can it be since that's come back? And what are the new rates, the revised rates of the rigs?
So we used to have rates. First, let's go through the rates. Rigs used to be at rates around 40,000. These are the old contracts which were there. Those rates are now, on recent pricings, are in excess of 80. In fact, one pricing in the last tender, which we were not in, was in excess of $90,000 a day. So we will reprice higher. The one rig which was on doing maintenance between two contracts has got repriced at a higher rate, and she has gone on higher now in January. She was off for 2 months in the last quarter. That was an expense of about $5 million just on doing the refurbishment, preparing for the contract. And of course, you lose revenue for that period. So yes, that last quarter was a blip, and it was completely expected because these are scheduled and you have to be done between two contracts. But the rates are improving across the board. Every pricing which we have seen so far is higher than the previous one.
All right, we'll let you go on
Including on
that
the
note.
offshore vessels as well. So offshore vessels
Sure.
on 3-year contracts in India have priced between 50 and 90% higher than their old rates, which admittedly were very low to start with, but now they're at very decently profitable levels.
All right, we'll leave it at that. Thank you so much, Mr. Shivakumar, for joining us and taking us through your numbers.